UK company directors can get almost 50% off their next iPhone. In this video, I'll break down the numbers, show you exactly how it works and what HMRC rules allow this to be possible. I'm also going to show you how buying any other tech through your business can save you a ton of tax. My name is Rayhan Moghul. I'm a chartered accountant and the founder of Sidekick Accounting. I've helped hundreds of business owners make more money and pay less tax using strategies similar to what we're going to show in this video. Before we jump into the tax savings and tactics that allow you to get almost 50% off your next iPhone, let's talk about the HMRC rules around mobile phones for company directors. HMRC does not consider a company-provided mobile phone that has an element of personal use as a benefit in kind. This means the company can provide up to one phone per employee and nobody gets hit with additional national insurance or tax. This is a huge advantage because it makes that phone purchase a business expense rather than a personal one, which means you can buy it using pre-tax income. Now let's get into the details. How do you actually save hundreds of pounds on your next iPhone? If we take the base model iPhone 16 Pro as an example, it currently retails at £999. The first savings you can have by buying that phone through your company is VAT. Assuming your company is VAT registered, you can claim back 20% of the purchase price, which individuals can't. VAT is charged on most things you purchase in the UK, and businesses can reclaim it if they are registered. On the iPhone 16 Pro's cost of £999, VAT makes up £167 of the £999 purchase price. That means for a VAT registered business, that phone is straight off the bat costing them £832. Next, let's look at corporation tax. Purchasing an asset like a phone qualifies for capital allowances, which is essentially how you can take the full cost of that asset off your company profits. In other words, it's tax deductible, which reduces your company profits, which means you're paying tax on a smaller amount. With today's corporation tax rates of 25%, reducing your profits by £832 results in £208 of tax saved. So after taking that tax deduction, that £208 of tax saving effectively makes the purchase price of the phone reduced from £832 down to £624. And the final tax you're going to save by buying this phone through your company is personal tax. If you as a company director buy that phone personally, you're using money that has already been paid to you and taxed at either income tax or dividend tax rates. Let's assume you're taking a tax-efficient salary of $12,570 and you're taking the rest of your income as dividends, up to the top of the basic rate band. That means that the dividends you take are taxed at 8.75%. If you paid yourself £999 to buy the iPhone, you'd also need to pay £87 in dividend tax to be able to do that. That makes the phone £87 more expensive to you personally versus buying it through the company, even if you didn't do any of the other things I've just spoken about. So if we add all of those savings up across VAT, corporation tax, and personal tax, the cost of that iPhone to you is £537. That's a saving of £462 compared to buying it personally, or 46% off the purchase price. These savings can be applied to a lot of things that you buy through your company. So always make sure you know what's tax deductible and what you're allowed to put through the company and maximize those deductions. If you found this video helpful, give it a thumbs up below and subscribe to my channel for more tax saving content.